Today is thankfully Friday, May the 17th. After a pretty crappy week, we saw the market starting down this morning. And then, of course, a couple of tweets from the president saying that he was going to take tariffs, shelve tariffs for European autos for another 6 months. Actually, he didn't specify 6 months. When the market started to tank in the day, he changed it to 6 months, but he said he was going to delay them, and that helped the market a little bit. And then, of course, came news at the end of the day that the China talks were not going well, because we were told by the US side that they were progressing well, but then the Chinese said, look, what talks? There haven't been any talks. And that sort of exposed the emperor's clothes, and down we went. The only good thing is that volume was a little bit off of normal in all three of the markets, whereas in midday it was up above average. Everything pretty much finished in the red today. The stock market oscillator did finish at the neutral point yesterday. So based on decliners having led advancers by a factor of 3 to 1, we're going to see this one move down somewhere maybe around the 100 mark, the 80 mark, negative 80 mark. So let's just take a look at the disaster that was today. Well, not a disaster, but we had this kind of a range. We had a range of 31 points, but we finished off of the lows, but down near the bottom. The only thing holding us up today, the 50-day exponential moving average, this blue line. We saw yesterday, do you remember yesterday we talked about the only thing we could find in the Ichimoku was that the Chiku span had hit resistance on this candle, and that could have possibly portended to a down day. And it certainly started that way, and it certainly ended that way. So it was the Chiku span that we noticed yesterday was our tell sign. Apple came up and hit the top of the cloud and just bounced back. This just happens all the time, where it got support on the 200-day moving average and finished the day somewhere in between, but still off $1.18. At one point, it was up about 10 or 14 cents, but it started off the day down $3. Caterpillar, this stock is in trouble. It's just not a good thing. We've created another gap now that we have to fill, so we can take this gap and move it down here, because this gap has to be filled before we can fill the one up there. Gold, I want to point out the gold miners. 50 moving average is into a death cross with the 200. If you're holding gold miners, or even gold for that matter as a hedge, the dollar is still strong, and the stock market is not oversold. So gold is not going to be a place to hold money right now. We did get a bounce off the 200 yesterday of the Chiku span. Back here we saw rejection. Today we saw support. So who knows? I'd be watching this deadly cross here of the 50 exponential crossing below the 200 exponential for our gold miners. Intel, still a sick little puppy, unable to bounce off of the whole week, just not moving anywhere. Two stocks, Whirlpool finished right in the middle of its range, just above the 200. Remember I said yesterday that if it came down and tested this value right here, which was the previous low, that I would buy some. Well, I wasn't around to do it. But if I had, I would have made a little bit of money. And then I'd be taking it off when it hit the cloud. But I wasn't around to do it. I'm sure I'm going to have another opportunity, maybe even a better one. So this is not the type of market where you say, boy, I got to buy the dip now, because there may not be another one. There will be another one if you just wait for an hour. And Western Digital finished in a bit of a doji, rejected off the 8 moving average. So all of these stocks that we're playing today, I've been playing for a while. They're all influenced by the technicals, all of them. They've all had the 50 or the 200 or the 8 exponential moving averages in play today. Be a technical trader. Don't get out of the market. Don't overreact. Look for opportunities to add to the positions you already have. I didn't add anything this week. And I don't feel, and I didn't take anything off this week either. I don't feel one way or the other. It's going to be a long time before we settle these tariff things, and it might take an election. So this might go to 2020 before we get this absolute nonsense of market domination by tweets. This is what Jim Cramer said on Wednesday. I believe it was Wednesday, and I reported it in the end of day video, that he said that he doesn't trust the market because it's responding to the president's tweets. And we saw that 3 times, well, 2 times today. And then at the end of the day, we saw it happen when the Chinese put out the news, not on Twitter, that there were no talks. So contrary to what we've been told by Mnuchin and the rest of those folks about the talks progressing well, there aren't any talks. The emperor is closed. Have a good weekend, everybody.